Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HUAXIN Cement Interim Report. HUAXIN Cement Co., Limited, offers a diverse range of businesses and services, including manufacturing and selling cement, providing ready-mixed concrete, aggregates, clinker, and cement bags, offering cement-based high-tech building materials, and other building materials, providing cement technical services and engineering design of building materials, researching, manufacturing, installing, and maintaining cement equipment, importing and exporting cement, engaging in cement kiln co-processing of wastes, and cement engineering general contracting, offering technology development and consulting services, providing environmental design, construction and waste disposal services, offering logistics, accommodation, land and building rental, and management and staffing services. HUAXIN Cement stock price skyrockets. A year of strategic growth. In the past year, HUAXIN Cement stock price has surged by an impressive 131.9%, driven by a combination of strategic initiatives and favorable market conditions. The company's accelerated international expansion, major acquisitions, rebounding cement prices in China, and positive analyst sentiment have all contributed to its remarkable growth. HUAXIN Cement's aggressive expansion into overseas markets has been a key driver of its success, with overseas revenue growing 15% year-on-year in the first half of the current year. The company's acquisition of Lafarge Africa is expected to further boost its international presence, adding significant production capacity and expanding its market share. The rebounding cement prices in China have also benefited HUAXIN Cement, as the government's efforts to reduce excessive competition and overcapacity within the industry have improved market concentration and competitive edge. Positive analyst sentiment and performance from multiple brokerages have further contributed to investor confidence in stock performance. Overall, HUAXIN Cement's strategic growth initiatives and favorable market conditions have propelled its stock price to new heights, making it one of the most successful companies in the cement industry over the past year. The primary drivers of revenue growth or decline in the cement industry are multifaceted. On the growth side, a strong national economy with a 5.3% year-on-year GDP increase has contributed significantly. Additionally, fixed asset investment and infrastructure sector investment have also seen increases of 2.8% and 4.6%, respectively. Overseas business, particularly in Africa and Asia, has shown impressive growth rates of plus 19.4% and plus 12.22%, respectively. However, the industry is not without its challenges. Excess capacity and declining demand have led to a decline in sales volume of cement and commercial clinker by 2.63%. The domestic cement business has also seen a decline of minus 1.26% year-on-year. Furthermore, specific businesses such as RMX, Aggregate, Concrete, and Dujungyan Lafarge Cement Co., Limited, have experienced significant declines ranging from minus 9.88% to minus 43%. These contrasting trends highlight the complexities of the industry's revenue growth or decline. Net income and profit margins experienced significant changes over the years due to various factors. Initially, net income increased by 12% year-on-year, page 7, driven by a price recovery in the cement industry and decreased fuel costs. However, overseas business saw a decline of 10.43% year-on-year, page 9. Despite this, overall net income continued to rise. Profit margins also underwent changes across different segments. Cement profit margin increased from 20.71% to 29.74%, page 9, while aggregates remained stable. RMX's profit margin rose from 11.61% to 13.12%, page 9. Comprehensive gross profit margin improved by 5.27 percentage points to 28.92%, page 9. In 2025, operating and net profit margins saw significant increases, reaching 12.8% and 8.6%, respectively, page 34. Net income margin also rose to 118.3%, page 36, driven by a combination of factors including price recovery, decreased fuel costs, and cost reduction efforts. The company's focus on stabilizing sales volume and increasing prices contributed to these improvements. The company is generating positive operating cash flow. This is evident in the financial summary, where net cash flows from operating activities are consistently reported as positive across multiple pages and periods. Specifically on page 10, page 37, page 119, and page 154, the figures show that operating cash inflows exceed outflows, resulting in a positive operating cash flow of RMB 1,623,794,304 to RMB 2,351,119,111. This indicates that the company is generating sufficient cash from its operations to meet its financial obligations. The financial summary reveals a stark contrast in the performance of different segments and regions. The overseas segment excelled, with revenue reaching 4.43 trillion RMB, profit before income taxes at 819 million RMB, and net profit of 588 million RMB. In contrast, the domestic segment underperformed, generating significantly lower profits despite higher revenue. The Tanzanian shilling and Nepalese rupee suffered due to depreciation against the US dollar, negatively impacting their respective economies. Overall, the overseas segment's strong performance overshadowed the domestic segment's struggles, while other regions' performances remain unclear. Management is optimistic about the company's outlook, citing sufficient funds for new projects and a strong financial position. They plan to focus on cost control and efficiency improvements to mitigate market fluctuations, while also investing in energy conservation and emission reduction upgrades. The company has no plans for material investments or acquisitions, indicating a cautious approach to growth. Overall, management is confident in the company's ability to navigate current market conditions and achieve its goals. The company has a history of paying dividends. In fact, it has been distributing cash dividends to its shareholders since at least the first half of 2025. The amount distributed in this period was RMB 304,384,746. This indicates that the company is committed to returning value to its investors through dividend payments. Concerns over inventory buildup. A growing issue. The financial summary highlights a pressing concern for companies: inventory buildup. This issue is evident from various points, including an increase in provision for write-down of inventories for raw materials and spare parts on page 82. Furthermore, specific concerns related to Wuhan Beihuadang Supply Chain Technology Co., Ltd. and Embuzen Johari Commercio suggest potential issues with inventory buildup or supply chain disruption. These findings indicate that companies are struggling with managing their inventory levels, which can lead to significant financial losses if not addressed promptly. The lack of specific concerns about supply chain disruption suggests that the primary issue lies in inventory management rather than a broader supply chain problem. That concludes the financial summary for HUAXIN Cement. Feel free to comment below, and I will be happy to answer them when possible.